it's very much a case of when the Fed will move as opposed to whether they will. And I think what we saw last year is that they delayed it right till the very end. They bought as much time as they could. And I think it seems as though that is what's emerging in 2016. I wouldn't be surprised if we do have increased expectations being pushed out to November and December. And, the Fed will have to raise. There's no question about it. Unemployment at 5%. And where monetary policy is at the moment, it's very, very low. It's very, very loose. Any central bank credibility must be maintained. But they have time, and that's very important.
But they have time. There you go. So this whole cautious, prudent sort of message or tone that Yellen is taking, right? You're buying that. You're saying forget April. That's a non-starter this month. June probably not. More likely November now for a second hike.
I think at least any move will be at the earliest in the final quarter of 2016. I can't see anything over the next few months because it will come at a shock. It will come at a shock given the recent comments, and the Fed is very, very wary of that. They don't want to cause any panic in markets. The US economy is finally starting to reap the benefits of very loose monetary policy. There's also the political implications. We do have an election towards the end of the year, and I think the Fed will probably want to wait until a lot of that has filtered through into the market. So I really do think it is an issue of the fourth quarter.
Okay, so what we're talking about is November for a second hike, but November after the U.S. presidential elections.
Yeah, well, it doesn't necessarily have to be after, but I think it'll have to be towards the end of the year where the market has basically priced it in and there's certainty as to how the outcome of that election will play out.
Okay, just very quickly, let's talk about stuff happening ex-U.S. Do you think the Indian market looks interesting now? We've got the RBI meeting and deciding on rates tomorrow together, same time as RBA where you are.
Well, India must be really reaping a huge economic benefit from these depressed energy prices. It is one of the largest importers on a net basis of energy, different types of energy sources, whether it's coal or oil or gas. And there's a huge implication to lower energy prices on the trade position. So there's no doubt that at some point you have to start to see that being reflected in the macroeconomic picture, in the government tax receipts, and in the way that the corporates are reporting their earnings. That has to flow through into the stock market and create this much needed sense of stability and perhaps some optimism around the Indian growth story. It is very, very significant to the Asian region. It's been sleeping, it's been very quiet and dormant. There was a lot of hope after Modi's election that finally we'd start to see some of the reforms that were needed. And I think what will help that across the line also on the economic picture is the depressed energy situation.
Okay, and does that mean that Raghuram Rajan is going to cut rates tomorrow in India or not?
Well, I'm not sure. I think they'll probably sit on their hands. The Asian central banks, the ones that can move, are really watching what's happening around the world, with the exception of Japan. And we all know where Japan is. But the South Koreans, the Indians, the Australians, the New Zealand central bank are very, very mindful of what's happening in Europe and the delay tactics in the United States. So it's very, they're viewing their local economies, but also being mindful of what's happening externally and how that impacts their economies. It's very difficult to see any Asian central bank increasing. We saw what happened in New Zealand when they tried that. So I think the door is still open for cuts. And I think if not this month, maybe in the next few months, we will start to see more Asian central banks moving in that direction.